Good afternoon. Doing this a bit later than usual. Dornbush Download 33. Andrew.
It is afternoon.
Dan, hello.
How are you going?
G'day. What's happening, Dan? I'm on holiday, so I'm having a great time.
You may as well go then, Andrew. I'll just wing it here myself. We thought this week we'd have a look at a couple of the recommendations we've made in the past and
scary stuff
and a bit of an update. So we picked the good ones.
There was only 4 that we could find.
We had to leave Michael's out, of course.
Special over Michael.
But Challenger was my first one. 25th of February. Price at the time was about $7.10, now $7.24. Quarter 3 generally weak for annuities apparently, but they're predicting an 11 to 13% growth in annuities for this quarter. So
what's driving that, do you reckon? Is that like the share market being a bit volatile, people chasing annuities and that certainty of income?
A bit of a certainty of income, and I think the way they're selling it too, you know, they're saying lock up in an annuity your fixed costs, and it makes a lot of sense, doesn't it? But you know, whether the rates are still a bit too low for annuities, and from my side of things they are, I think. But they're pretty good. Our research house Lonsec has a target of $7.80 on them.
So a bit to go there yet?
A bit of potential there, yeah.
Okay.
What about yourself, Andrew?
My 2 that I had was Wesfarmers and that FSA. And if you remember, FSA was at Fox Symes. Those people that when you're watching TV and, you know, I've got too much debt, help me out. Share price, I think, was about 127. It's now 125, so it hasn't done a lot. Probably the key thing that's occurred since we last spoke about it, Dan, is that directors have actually been going on market and buying shares themselves. And, you know, if you're trying to find a positive sign about a company, when directors are buying their own shares, they're really explicitly saying to you, hey, we think our shares are good enough for our own money. The flip side to that is the CEO of Corporate Travel actually sold 2 million of his shares about a month ago, and the share price has actually dropped by about $1 So yeah, watching those inside trades can really be an important tell as to what the insiders think of the future. So yeah, FSA, you've got the directors buying, and the other one, of course, Wesfarmers. If I go wrong buying Wesfarmers, I give up.
We're in a world of pain.
We are in the world of hurt. Look, they're down about 70 cents, but nothing untoward going on there.
They're looking for acquisitions too, aren't they?
Yeah, well, they've got no debt. Well, okay, they've got $2 billion worth of debt, but in the company the size of Wesfarmers, it's virtually no debt. They look at about 80 different acquisition opportunities a year. They actually have their own private equity firm. They have about 40 advisors, and they just go around the world trying to find opportunities.
Amazing.
At this stage, they can't, but if you remember, they jumped in and bought Coles at the absolute top of the market 7 or 8 years ago and nearly had a rather unfortunate event. So you can understand why they're so circumspect these days. But yeah, look, Wesfarmers is still trading around a 5% fully franked dividend. It's gone ex-dividend, so you've got to wait a while for that dividend, but still very comfortable with them as I am with FSA. So what was your second one?
AMP China Growth Fund.
Oh, yeah, the old
AGF.
AGF.
Yeah. So last week, Michael and I spoke about that one, and the price was $1.44, and it's since come off. And we've got a couple of charts there. The first one is the Shanghai Composite Index, and I've put on some arrows there, which are the little indication there is called a doji. And you can see where a doji, a D-O-J-I, and you can actually see on the chart where, for the 3 or 5 days after that, the value of the Shanghai Composite Index has come off. And the second chart there is the AMP China Growth Fund, and it sort of reflects that. Now, there was a doji on China last night, which unfortunately is not showing on our chart, so I'm thinking we're going to get 3 or 4 days of negative out of China. And if that's the case, you know, potential to buy some AMP China Growth Fund, maybe around $1.35.
We seem to be getting more, and that's a good one, we seem to be getting more interest from clients looking for that international exposure. You know, there's that Magellan Global that just listed that MGE.
They're holding up pretty well. 250 they listed, 253. So.
They're doing pretty well, and especially for those looking with companies with predominantly US earnings. And the other one, and I can't remember the code, we'll put it in the show notes, is there's a European-based ETF, an exchange-traded fund that focuses just on consumer staples. So there's more client interest in that type of stuff. Again, personally, I'm a little bit cautious because I like the franking credits, but even so, as you said, you know, the Chinese economy, that data that came out today, they're still growing by 7% per annum, triple what the Australian economy is growing.
There was a little bit there today that retail's come off a little bit, but, you know, on the other hand, does that mean there's going to be some more government input So a bit more quantitative easing in China is potential.
And in fact, just before we started filming this, that's exactly what I was reading, that, because it's a command economy, and the Chinese government have much stronger hands on the levers compared to here in Australia, where it's a market-based economy. They will be pulling harder on those levers. So it's a bit like iron ore. We won't talk too much about that because we've talked them to death the last few weeks.
Yep.
But BHP and Rio, with the iron ore price coming off, in particular with China, my view is it's a buy.
It's funny, Andrew, everybody's on that bandwagon too now with iron ore. Perhaps we're going to see a bit of a rally in that as well now that everybody's talking it down, the reverse indicators. So.
Correct. Anyway, Dan, anything else from you?
No, Mario Draghi's talking tonight on quantitative easing in Europe, so that'll be interesting.
Is he a character on Super Nintendo?
He is, yeah.
Super Mario.
So it'll be interesting. What's that worth? $1.1 billion or something?
So he's the chief of the European Central Bank, and the European Central Bank has stepped back for a long period of time relating to trying to stimulate the European economy. The European economy would be the largest economy in the world if it was an economy. So it's pretty significant that Super Mario actually sort of continues with that quantitative easing, and if they do continue to do that, positive for world share markets.
Yes.
So. Anyway, I think that's about it from me. I'm going to go back on holidays. Dan, thank you. See you next week.
Bye.